Let's take a moment and review the stock of ARM. So much has been made of this that I think it deserves its own video. Background on how we traded ARM for the group. We went long in the 50s. It wasn't a perfect entry because it fell apart after that. It was time to add. I had mentioned to add around 46. I personally missed the add, but I exited in the 70s somewhere, so clearly missed the last spike. Now it is in the hands of the same people that were trading in 2021. Let's look at the fundamentals. It's kind of a peculiar stock, and then we'll talk about the technicals and how I could trade it. The easy statement here is if I'm an investor, before I go into the fundamentals, if I'm an investor and I like the fundamentals, this has the acronym of NOPE. This is not an obvious point of entry. So if I'm one to like easy entries that are not fraught with danger, this doesn't jump at me like it is one. What that means is that I should just exercise caution. If I'm an investor and I'm pouring my entire allotment all at one place, I think I could be opening myself up to some disappointment for a really long time. In other words, what if the market corrects? You think this one is going to hold up here? No. It has a lot of weak hands. So I'm not saying to short it. I'm not saying to go long it. I'm saying if you are convinced that you need to own 100 shares, I personally, not to give anyone advice, I personally would not own more than 10 or 15 of them now to just relieve the itch and then decide later. If I'm in the business of going long-term, investor for the long term, so where's the fire? I could double my number of stocks. I mean, it has moved so much. All right, so fundamentally speaking, it's a peculiar setup. Why? The COGS are so low. So if this is hamburgers, the cost of the lettuce, tomato, meat, and bun and cheese is this small. So on paper, this should be like extremely profitable, but then they find operating expenses worth of this much. So needless to say, they do sell ideas, that's why that is, versus widgets. So it has a very strange P&L. It warrants looking into from that perspective. Yes, it looks like a slam dunk on margins if you only stop at the operating margins. And then after that, there's room for improvement, to say the least, right? So how do I value this? I have to look at price to sales at some point. That would probably be a fair assessment. Like, how is it doing on the top line? Is it growing its sales? So there's a lot of time. I need more time in order to make a definitive decision. But at 50, it was a slam dunk own for me. So I'm patient. I'll wait for the next crash. Yes, there will be one. They always have. All right, so let's get into the nitty gritty. On the daily chart, this is not enough information. From this, I can tell that 80 was a clear breakout point, and the measured move on that one is $30 from there. So 120 is explainable from the breach of that, from a cup and handle type of a deal. So that's one place. Another point of contention is 66, and in the 50s everybody hated it. Now everybody loves it up here. So these are the big picture numbers. If we zoom in to a 1 hour chart, we can see some weakness. Volume profile, have you heard of that? I'll give you a quick lesson on volume profile. By the way, if you like this content, give it a like and or debate the content in the comment section. Keep it civil. This is a family show. Also, I'm going to put up a QR code. Join the group. We trade live with 300 people every day, all day. Many contributors. I organize. Super quiet, not noisy. A lot of entries intraday, a lot of discussions long term. It's a unique situation. You owe it to yourself to check it out. Just get in for a month and see if you like it. I am confident you will stay for a long, long time. I'm going to offer you the idea of volume profile. For me, I'm not too concerned with when it happened, but rather where it happened. Like at what price did the volume happen? That would be more important for me. That information can be found with volume profile studies. This is one of them here. So clearly that red line, I didn't draw it. This is where, for this period of time you're seeing in front of you, which is January and February, 127 has been the most hotly contested level. So both bulls and bears love it the most up here, which is great. They have another level down here, which is also great. So if I put these two zones, they love it here, they loved it there, all that stuff in the middle. Well, that's a weak spot. What does that mean? Technically, it means that if they lose key levels, and I'm going to guess 114, 113, 115, that area, it's easy to lose a lot more. Those are the weak hands. So in other words, let's say they fight over this support zone and this support zone and this one and then lose it. That's easy. because there's no support. Consider it a traffic jam and the lack of a traffic jam. Or if you're pushing a box on gravel and then you hit a slick surface, you push it pretty quickly once you hit the slick surface. On the upside, there's not a lot of resistance, so that thing works both ways, right? So there's level resistance. We can see it failed on Friday at 137. It failed at 142, so you make notes of those lines. So you say, okay, there's a seller out here, there's a seller inside this zone, so those are R's, right? Resistance, and this is support. Much better support, right? If it falls to here, then I'll do another video about the levels down there. There's plenty of levels to be looked at down here. I think 102 plus or minus a buck is important as well. So you'll have another support level here. Every wick you see is a selling point. So there are sellers here, here, and here. So you can say, okay, I should expect these sellers to show up again. I want to caution you. This is in the hands of, I don't know, some sort of a Wall Street bet type of a trade. So don't have too much conviction in either direction. I know what I know on the charts, and they're solid. What I just told you here is super solid. Whether there's a special circumstance that allows it to go through these wicks that are on top, like they're not there. I mean, you've seen stocks go up 40% these days, like SMCI and this one and NVIDIA to a degree. That's just crazy stuff. Periodically, things go crazy, and this is in the crazy land right now. If you're an investor, if I'm an investor, I'm looking for entry points that are easy, that are layups. In the 50s, it's a layup. In the 60s, it's okay now. In the 70s, it's okay. From a valuation perspective, I think it makes more sense in double digits. And once it goes to double digits, we'll have another conversation about that as to when. Again, if you like the content, let us know that. Subscribe to the channel. It's free. And join the group. We will trade live every day, all day.